Hello, fellow traders. 'Tis I, the rumpled one. Somebody didn't said they didn't know what my email address was. Um, anyway, it's Monday, February the 11th. The year is 2019. Let's talk trading. How to trade like a pro. Shedding your rookie skin. I was watching and listening to another Forex channel earlier this morning, and this guy was basically talking about, some of the things you have to do. And unfortunately, he made the mistake of talking about trading, different time frame charts, and it just lost me. Because, see, one of the things you have to do to shed your or actually the thing you have to do to shed your rookie skin is you have to eliminate, get rid of, leave behind things that aren't true, things that don't work, things that are false, things that are just not professional, things that rookies do, your mistakes, your poor habits, your failure to execute. You have to leave all those things behind if you want to shed your rookie skin. And as I go through the charts, I'm going to talk about some of these things. For example, if you're not using money and risk management, if you don't have a plan in place, then you've got to get rid of that. You have to shed that. You now have to put a plan in place. And it's just so simple. I show this every day in these videos. And that's just one of the steps. If you want to shed your rookie skin, you have to have money and risk management in place. You have to make sure that no one single trade takes you out of the game. Okay? Because you see, there's two sides to the equation, there's winning, there's losing. And you want to make sure you lose as little as possible. You really don't have control over the winning side. You do have control over the losing side. And that's just so important. Okay, let's see. Where are we? Well, all the gaps have filled. When I made the video last night, there was two that hadn't filled. Once again, it's up to you. If you see something that works and you don't use it, that's a rookie mistake. You've got to shed your rookie skin. And I'm not just saying it because I came up with it and I show it. If you see something that works and you fail to do it, you're a rookie. If you keep doing something that doesn't work and you fail to stop doing it, you're a rookie. If you wanted to trade like a pro, you have to quit doing things that rookies do. Okay? Now, once again, we had entered that lower wick zone, previous week's wick, and we came out of it, rocketed out of it. There was pips to be made. See, we're 20 pips over that open. We're not quite back to the yearly open, but you can see on the week and the day, since it's still day one of the week, it's the same. And right here, once again, actually, let's squish this down so you can really get an idea what's going on here. So you squish it down. There's the first day of the year. And then you can see here, this is February. So this is the month right here. And now here's the week. And you see here, we broke through the bottom of the month in past couple of weeks, or past couple of days, I'm sorry, right there. And now we're back up through, we're above the lowest day, day one of the month. The low of day one of the month, okay? Not the lowest day of the month, but day one of the month. And you can see here, we're still below all the first trading days of the past 12 months. You can see here, we are now above the low of the first trading day of February, but we're still within that range of the first trading day of February. Looking for breakouts. And you can see here we entered back into that inside bar area, and then we exited. And now we're heading back the other way. And, you know, once again, you guys can look here. I'm not going to click on all these, but you can see where the inside bars are for the day, for the week, for the month. And just in case if you're wondering, something here, that's on the 2017 dashboard. Now, if you donated for 2018, you are going to get a copy of the 2017 dashboard. And if you donate for 2019, you get a copy of the 2017 dashboard. Because I'm still working on this dashboard because I don't have the time, or I'm choosing not to take the time to completely rewrite it, because it's probably going to take me about a month or so to do it. And I've got other things that are taking my time. So I can't dedicate the time to recoding the dashboard, because I'm still behind. I haven't sent out batch 1 of the 2019s, which I'm going to have to do soon, or you guys will be mad at me. Okay, looking at the day, 67 pips range, kind of, it's not doing what the yen did, but you can see it's just a slow day, only 5 pairs over 100, and 4 of those pairs being Swiss franc pairs. And you can see here, we entered the lower wick zone of the previous day. We exited the lower wick zone of the previous day, entered the upper, exited. So you can see a lot of wick zone activity. Now, you know, shedding, bad habits. If you're doing something that isn't working, as I stated before, you got to quit doing it. So if you're trading and you're not putting on a stop loss and you're looking at a 500 pip drawdown, don't do that anymore. Just don't. I equate it to an elevator. If you get on the elevator and you think it's going down and it starts going up, do you ride it all the way up, or do you get off the first opportunity you can and wait for it to go your way? I mean, just think about it. Now, I want to show you something about the euro yen, since this is something I was trading. You see here how it started out, and right here was a really nice breakout opportunity. You see you have higher lows and pretty much flat highs. And then it broke out, okay? Now, how do you trade this? It broke out, right? And it came here. But you see here how it came back down? And, depending on where you put your stop loss, you didn't get stopped out. But right here, these sneaky guys, they knew probably that there's people who put their stop loss at right their entry +1, or right at their entry or just below there, and they came and they wiped out your stop. So why am I bringing this up? Simply right here. That's about 19 pips or so. If you're up 19 pips and you give them back, that's your fault. Okay? Because then you see what happened is the market then ran up about 48 pips. So how do you trade that? At any point in time, you could have locked in part of the profit, maybe take 50% off. Remember, I told you in another video, one of the rookie mistakes is putting all your eggs in one trading basket. Meaning, if you normally trade, say, one mini lot, you click on, enter, buy or sell one mini lot. No. Click on half of a mini lot and then click on the other half. So you have 2 trades going. So, rookie mistake, putting all your trade in one trade basket. So in this case, if you had taken profit here and you moved your stop up here, you would have locked in some of the profit. You get stopped out here, but you have a chance to re-enter. Where would you re-enter? Possibly, as you can see, price cutting back across wick zones. I mean, that's one of the reasons why I like the wick zones, is because you can use them as entry, you can use them as exit. It shows the price action, and you see it all the time. And then here, what happens? We know price is going to make a new high. So it made a new high here. Here's the open. It failed to make a new high, and it exited that wick zone, which would be the highest open holo trade. And there was pips to be made, only a handful. And then it went on to make a new high here, right? Went on to make a new high here. But what did it do? It came back through the previous high into that wick zone, out of the wick zone, holo trade. And once again, you can see right here. Okay, why is this not doing what I want it to do? Right here, you had a chance for about 38 pips. Not bad. Not bad. Once again, buy zone, horizontal lines. The pivot point was here. And see, once again, now look at this. See, this is a totally different setup. We're just trading a buy zone. Look what happened to price. It came back into the buy zone. Now, H1 would have been red. Price exited the buy zone. So you could have taken a chance just saying, I don't care. Price stopped. It's going back the other way. I'll take a chance. You could put your stop loss here or wherever you would want to put it based on your position size. By taking that chance, look at the opportunity. I mean, you had a nice run there. Once again, if you went in here, starts to come back down, take half off, let the other half ride. You could have put your break even somewhere here, never even came close. Once again, looking at price action, you could have made another nice trade. And then look, a third time, dipped into the buy zone, and it went up again. So the thing is, you know the buy zone works. You just have to trade it. And see, part of it is if you see it enough, then you might start to have a little confidence. But when you start doing it and it works, then you really gain confidence. The rat zone. Green rat zone, red rat zone right here. Once again, looking at the M15, made a high, didn't into the wick zone, didn't come out, boom, highest M15 open. Because see, the holo doesn't have to be H1. I mean, you could do M1 holos for that matter. I don't suggest it. I like H1, but M15 also works. And see, we're not trading the chart, we're trading price. Okay, remember I called out the weekly pivot in yesterday's video? Well, guess what? It hit it. Once again, we know statistically these pivots like to get taken out. Yes, there's some that haven't been. There was 2 that got missed last year, and we've got 2 back in January that got missed, and we've got 1 missed just a few days ago, 3 days ago. But chances are they're going to get taken out. Price action. Am I beating a dead horse here? 3 ball at the top, red at the line. Once again, here you go. 10 pips, 20 pips. It comes back. Maybe you take half off at 20. Maybe you take half off at 15. Move your stop loss up to break even +1. Let it ride. Oh, 1 ball. At the bottom, it starts going long. Right here, crosses above that low. You're out. That's how a pro would trade. It's really simple. So, fellow traders, start shedding your rookie skin, because it's not what you trade, it's how you trade it. So go out there and drain the banks like a pro.